Polygon was one of the best performing assets during the last bull run, going up a staggering 111,000%. Since then though, MATIC, the token for Polygon, has fallen around 90% due to the entire crypto market collapsing. The question is, will MATIC return to or maybe even surpass its old all-time high? And what's the upside potential of MATIC in its current state? My conclusion after doing my own research, listening to hours of podcasts, and personally interviewing the CEO of Polygon Labs myself, is that Polygon is primed for potentially massive growth. Much more so than I think most people realize or expect. I was thinking with Polygon, being that it's a somewhat larger project already, that there wasn't a lot of upside potential left. But I now think the exact opposite. Nobody realizes what is coming with Polygon. It is a sleeping giant that I think is about to wake up. In this video, I'm going to dive into Polygon, their new 2.0 roadmap, the upcoming launch of their brand new Pol token, and the overall massive shift from Polygon being just this single sidechain to it becoming a universe of different interconnected chains and infrastructure, all built on cutting-edge ZK tech. It's pretty insane what they're actually building, and it has massive implications for crypto as a whole and could completely change the space as we know it. Real quick though, I have 3 different goals this cycle. My base goal is to make 1,000% gain for my overall portfolio this cycle. That means for every $1,000 invested, that would turn into $10,000. My mid goal is to make a 5,000% gain this cycle. That would mean for every $1,000 invested, it would turn into $50,000. And my upper stretch goal is to make a 10,000% gain this cycle. That would mean for every $1,000 invested, it would turn into $100,000. Last cycle, my overall portfolio did around 4,000%. And currently, my portfolio is up around 305% this cycle, having invested every cent I own except the equity in my house back in late 2022. And already I've had some major wins this cycle, like Akash, which is up over 1,000%. To start off, you need to understand that Polygon isn't the same Polygon it was back in 2021. If that was like the last time that you've ever heard about Polygon or ever checked into it, it has changed dramatically since then. Back then, Polygon was just a single sidechain, a really good high-performative sidechain that had really cheap fees, but just a single sidechain. And even with it just being the single chain, Polygon was able to climb all the way to a $19 billion market cap at the height of last cycle. And today, Polygon sits at around $7 billion in market cap. And most people still think that Polygon is just this single sidechain, but they couldn't be more wrong. Remember, YouTube was once just a dating site, and Amazon was once just a bookstore, but both eventually became something much bigger. Back in 2021, Polygon spent over $500 million to acquire some of the best ZK talent on the face of the planet. They bought startups, made different hires, and started building toward this crazy, ambitious vision. ZK is hailed as like the future of crypto. It's this massive revolutionary step forward, but back then, most people assumed that it would just take a really long time to get to. Polygon, however, went all in on ZK, and these teams got to work building a new framework using ZK for Polygon. Fast forward 3 years. Today, Polygon doesn't even resemble what it once was. They've built so much that it's genuinely difficult to summarize it all. To start off, you have Polygon 2.0, which is all this infrastructure that's been built around ZK tech. So that now, instead of Polygon just being the single sidechain, it's this infrastructure for an entire universe of different chains. And this infrastructure in this universe of chains is actually quite different from anything else out there, and it's incredible some of the things that they're able to create using ZK. For example, normally, when you move between chains, it takes about 5 to 20 minutes to actually bridge between, chain A and chain B, to bridge between Ethereum and Solana, or Ethereum and Arbitrum, etc. And it's also typically really expensive to bridge between these chains. However, Polygon has built something called the interop layer. It allows users to bridge between different chains in seconds and seamlessly as if they're using the exact same chain. Meaning, when users move between chains in this Polygon ecosystem, they won't even really know that they're using different chains. You can literally have thousands or millions of different chains in this Polygon ecosystem and it wouldn't matter. Switching between them would be the equivalent of switching between websites on the internet. Here's Marc, the CEO of Polygon Labs, explaining it.
Right, so Polygon started basically saying, hey, we want to scale Ethereum. What's the best way to do that? And there was nothing out there to scale Ethereum. And so we ended up building a sidechain. And that is called what we refer to as Polygon POS. And that's what most people think of as Polygon. It's really just this sidechain. Now, the thing is, like, this sidechain actually doesn't get the recognition that it deserves. It is a sidechain that actually, you're right, it is secured by a decentralized set of validators. It is super cheap. It is super fast. It has this very robust ecosystem of dApps, like just frankly, I think probably more dApps than any other chain. It has all the tooling, all the SEX connections that you would want. Like it has everything that you would want in an ecosystem.
Just to pause for a second and clarify, when he's talking about SEX connections, he's talking about CEX, centralized exchange connections. Just in case some of you guys were like, wait a minute, what is he talking about?
But the truth is that it wasn't the best built chain initially. What people don't realize is how much effort we've actually put in to Polygon POS to actually improve it, such that, now it has like lowered its reorgs to basically being non-existent, right? It has a parallel kind of EVM implementation, a lot of things that people haven't realized.
Okay, to start off, he made a really good point that there's been a lot of development that's happened on the Polygon sidechain, the chain that, if you've ever used Polygon, it's the chain that you've probably used. A lot of development has happened to make that cheaper, faster, and just better. And a lot of that development has mostly gone unnoticed by the market. Specifically, one thing that's really gone unnoticed is this concept of parallelizing the EVM. Put simply, it just means you could have a lot of things happening all at the same time on Polygon without it really pushing up all the fees and making it super expensive and super slow. This is really similar to Solana and the Solana virtual machine. He also talks about Polygon's aggregator layer and this concept of unified liquidity. And this is actually a really big deal.
But on top of that, what we said is, okay, but Polygon POS is not the only thing that we need in the future. We need something more. And when we think about that, we think of like two things that define the internet and need to define blockchains. And so we kind of define this idea of like having infinite scalability and unified liquidity. And so what we did was we said, okay, to go ahead and develop this, what you need is really good ZK tech. And so we acquired two companies that I think combined, most are probably considered like the best ZK kind of team in the space. I think it's pretty safe to say. I think there's like other very good teams, don't get me wrong, but I think they're generally viewed that way. And now we center kind of everything around that, like the ZK tech. And so we kind of define this vision of Polygon 2.0. And so one of the things that we are building that will be kind of released this year is what we're referring to as like an aggregation layer. We can get into that more, but the bottom line is it allows aggregating transactions across all of these chains. So what you'll get is you can get like a CDK spun up, and then you can plug it into this aggregation layer. And now you have a chain that can share in the liquidity of all the other chains. So you get like this monolithic feel, but you don't have the limitations of being monolithic. And that really ends up being kind of the vision of Polygon 2.0.
Think of liquidity as essentially liquid power in crypto. And not power as in like energy and electricity, but power as in like kingdoms and kings and like politicians who have a lot of power. The chains and apps who control a lot of liquidity not only make more money, but they attract more users in development. And they're able to be a lot more efficient and do things that perhaps other chains and apps can't do with less liquidity. Basically, the more liquidity you have, the more you gain these like ridiculous outsized advantages as a chain or as an app. And normally with how chains are today, liquidity is fractured across different chains. Today, it's really, really difficult to move liquidity from say Ethereum to Solana or from Solana to Arbitrum. Like I mentioned earlier, typically you have to do something called bridging where you go to this site, you plug in your address, you plug in the address of where you're gonna send it to, you pay a bunch of bridging fees, which can actually be quite expensive, and you have to wait 5 to 20 minutes. By contrast, Polygon's aggregator layer makes it seamless and easy for liquidity to move between chains. Instead of having to wait 5 to 20 minutes to bridge between chains, it takes literally seconds. And it gets completely abstracted away, meaning the user doesn't even know that they're necessarily bridging funds. They don't have to go do this complicated thing where they go to this different site, they bridge over funds, etc. They're just using an app, and the app in the background is doing all these things for them without them even knowing. And just to make it even more crystal clear, let's say that you're on Polygon ZK EVM. That's a very specific chain, and you want to go use a perps platform on X1, which is like OKX's new chain that they're launching called X1. In a normal environment, what you'd have to do, again, like I mentioned, was you'd have to go to a bridging site, you'd bridge over those funds, take 5 to 20 minutes, pay some fees, and then you'd have those funds over on X1. In Polygon's new ecosystem, because of their aggregator layer, because of this concept of unified liquidity, to use those funds on that X1 chain, all you would have to do is go use that app on the X1 chain. It would be as if your funds were already there on the X1 chain when you go to use that app because of how this concept of unified liquidity works. So any chain that joins this Polygon ecosystem can essentially tap into day one this ocean of liquidity that's already available. Instead of chains fighting for liquidity, they're now sharing it, and every new chain that joins brings more to the table rather than taking away from what other chains have. And as more and more chains and projects choose to build within this ecosystem, the network effects that Polygon builds get really insane and massive. I asked Marc about some of the different chains that are choosing to build on Polygon, and here's what he had to say.
I mean, I think OKX just by default is super exciting with X1, right? It's 50 million plus users, maybe 60 million plus coming on chain. And the nature of their users is very different from many others, but it like captures like the entire Asian market, which I think is like incredibly active on chain in a way that like is not necessarily true, frankly, in the US market. So I think that one is super exciting. We've got, I mean, it's hard not to mention some of the obvious, Immutable, like they are, I mean, they're doing so well on the gaming front. I think people don't realize when you like put Polygon's gaming with Immutable's gaming, it's not even like there's like it's just like totally off the charts in terms of activity over there. Manta is leaving OP, coming over to Polygon CDK. I think they've got 900 million in TVL right now, something of that nature. So that's I think a very big one. I think A-Star, which is already like has historically been a huge kind of L1, leaving Polkadot and coming over to Polygon, I think is another one that like in kind of the Asian market attracts like a lot of developers and users. So I think that's like really interesting. We've got some like app specific ones that are coming up very soon. There's a DeFi one that is going to be super exciting. It's actually an app specific chain. There's one in the entertainment industry, a very well-known brand that is going to be like super exciting. So there's like a few more that are coming, but those are like the key big ones.
So we mentioned, like we talked about earlier, OKX's X1 chain, which OKX has over 50 million different users, primarily in the Asian markets. And soon, those users will be able to seamlessly onboard into this Polygon ecosystem via OKX's X1 chain, really similar to how Binance users could onboard onto BNB chain and Coinbase users can onboard onto Base chain. Marc also mentioned Immutable, which if you're bullish crypto gaming, between Immutable and Polygon, they control something like 70% of all new crypto games coming to market. And all these new chains joining the Polygon ecosystem will bring all their liquidity into this shared ecosystem. They'll bring all their users into this shared ecosystem, making it stronger, bigger, and more powerful. Now, when I was doing my own research, one of the biggest questions I had was, well, this is all really cool. Like theoretically, this is amazing and absolutely game-changing. But my big question is, when is this all going to happen? Because if this is something like, yeah, we can do this in like 5 to 10 years, well, that's not really that exciting. So I wanted to know, like, what is the date? Like, when is this all going to be live? Here's what Marc had to say.
So there's two pieces to this, and we'll be releasing this in like 2 different stages. We've got like, let's call it like version 1 of this. And it's actually going to be a pretty simple thing, simple, relatively speaking. It's basically just going to be a unified contract that all of these CDK chains will plug into. It'll just be a contract on a smart contract on Ethereum. And what that's going to allow is interoperability between these chains, but it's going to be like slow. It'll still be expensive, but it will allow like true kind of secure interoperability in a much more trust minimized way than what you get anywhere else. That's kind of like version 1 that, if we want to preview things for next month, will be like a next month type thing. And then if we fast forward probably about 6-8 months, a little bit later, what we're going to get is like the what I'll consider like the game changing nature of the interop. And what we start doing at that point in time is there actually is a kind of new layer being built. And what it does is it aggregates proofs from all of these chains. And therefore, as these proofs get aggregated, you are going to allow for atomic kind of transactions between these chains. And you will have sub 5-second transactions between these chains.
So Marc ended up going into some of the technical details, but the big important parts were, First off, part 1 of this big Polygon 2.0 upgrade is coming in just a month or so, which that's pretty insane. And the big part is that the full implementation of this aggregator layer is coming by the end of this year, which when he said that, that blew my mind. And he also directly mentioned that it will be sub 5-second transactions to move between these chains, which is insane. Like moving between websites is sub 5-second transactions. So it literally is like moving between websites when you move between these different blockchains in the Polygon ecosystem. And again, remember today, it takes between 5 and 20 minutes to move between these various chains. Sub 5-second transactions by end of year for Polygon's ecosystem is absolutely game breaking. Now, taking a more trader perspective on Polygon, because obviously I'm an investor in the space, I'm always looking for like different good plays. Taking more of a trader approach, I think there's a really key catalyst coming for the Polygon ecosystem that is potentially going to have an outsized effect on the price of MATIC, which currently right now, in my opinion, MATIC is so absurdly undervalued, it's laughable. It's currently valued at a $7 billion market cap, with most people, again, just thinking it's this sidechain that used to be popular back in 2021, but hasn't done much since. They're not taking into account like all these upgrades that came to that sidechain. They're not taking into account like all this other stuff that Polygon's been building. Most people are just completely unaware of what Polygon's been doing. But I also believe one of the reasons that MATIC is so undervalued this cycle has to do with a pretty common thing that happens each cycle in the crypto space. People tend to get this kind of shiny object syndrome in the crypto space, where the projects that were really cool last cycle kind of lose some of their luster and they turn their attention to the new projects that come out this cycle. So any new tokens that launch, they're like, that's the thing that I'm excited about. That old stuff, I'm not as excited about that. That was like cool a couple of years ago, but I want to see what the new things are coming out. Well, Polygon is about to get a new token. The MATIC token that everyone uses and buys today is going to turn into the POL token. And when that happens, I believe we're going to see a lot of renewed attention and hype around Polygon. Here's what Marc had to say about POL.
So I think POL is effectively, it enables some of what we just talked about, but I think the simplest way to think about POL is like a one-to-one version of MATIC. And so POL ends up being like, we kind of call it like a hyper-productive token, because you have that option to actually stake to multiple different chains and secure those networks and receive rewards. And the interesting thing about that, right, with POL is that when you do that, right now, if you stake on Polygon POS, you're taking like, let's call it like all the risk of transactions happening on Polygon POS and Polygon POS being successful. And if you were to take like any other individual chain, that's really what you're relying on. Unless you're like, again, inflating the token away a ton. And so when you get to the staking hub and you use POL for staking, you no longer are like, oh, I have to rely on just Polygon POS being successful. You can say, I think immutable ZKVM, when they want to decentralize their sequencer, is going to be successful. And we will be paid fees for this. Now, the interesting thing for something like immutable is POL will be used for staking, but the fees will be paid in IMX tokens. And so you as a validator are staking POL, you're receiving POL from the POS chain, you're receiving IMX tokens, and you're basically receiving a diversified stream of fees from just staking POL. And so that's the really interesting thing about POL, is this like very kind of diversified stream of effectively rewards that you receive from these different chains.
Okay, so MATIC was used for one chain and had a limited number of use cases. Like there's only so many things that it was used for, and it was only used for this one sidechain. POL will be used for thousands of different chains, and it has this entire new world of use cases that MATIC never even had. Which, by the way, right now, Celestia, you've probably heard of the TIA token, has been doing really well because a lot of people are buying it up and staking it, anticipating, maybe some airdrops from different projects that are using Celestia for DA. If you don't know what DA is, it means data availability. It's kind of a complicated subject I'm not going to really get into in this video, but basically there's different blockchains that launch that they're using Celestia for their data availability so they can get really cheap token transactions. It's kind of like one of the most expensive things when you're doing transactions is data availability. And a lot of projects have airdropped tokens to TIA stakers because they're projects that are using Celestia for DA. Well, just kind of as a thought experiment, what do you think is going to happen when you have all these new chains and all these new projects built on these chains launching within this Polygon ecosystem and they don't yet have tokens? I would imagine a massive chunk of those projects are going to allocate airdrops to POL stakers. I think this is also especially relevant considering Polygon has its own thing called Polygon DA, which is really similar to Celestia DA, but hasn't quite gotten a ton of attention yet. I believe when the POL token launches and people figure this out, they're going to start buying and staking the POL token in anticipation of hoping to earn some of these airdrops. And if you paid attention to the price action of TIA, then you can kind of anticipate what could happen with the price action of POL. And remember, this is just one really small niche of what Polygon is doing. There is a ton more regarding Polygon and what they're building and why I'm hyper bullish. And I'm going to talk about that, and I'm going to share my price predictions for Polygon as well. But really quick, before I continue, I just wanted to say I filled up all the slots for membership for the Obsidian Council for February, and it's now full. We were actually able to sell out in just a couple hours, which was amazing. Thank you for everyone that was able to join. If you weren't able to get in this time, and if you missed out and want to be able to jump in next time, there's a wait list in the description of this video. Make sure to sign up and you'll be notified next time it opens. Okay, so when I was interviewing Marc, he talked a lot about Polygon CDKs. These are basically just kits for developers to easily build and deploy their own flavors of different chains within the Polygon ecosystem. So you can build the Solana virtual machine, but on Polygon, or you could build a move-based chains like Aptos and Sui, but on Polygon. You could have IBC-enabled chains, privacy chains, and all these different flavors of highly specialized chains to really diversify the ecosystem and add a lot of unique use cases that you really couldn't get anywhere else. Another thing that Polygon is doing, if you're bullish on real-world assets or TradFi coming into crypto, is they're launching an institutional chain called Libre, with funds Brevin Howard and Hamilton Lane already partnered. Polygon, remember, is the one who partnered with Meta, Starbucks, Nike, and more during the last cycle. So out of anyone, they have a decent shot of pulling something like this off. Here's what Marc had to say about Libre.
Yeah, so the way that we look at like the CDK ecosystem is like, first, we don't control it, right? It's going to grow as it does. But in an ideal world, what you have is you actually have chains that cover like all of these different use cases, right? And so like Immutable covers gaming, and like you've got, Manta that does a lot in DeFi, and like, so you get like these different chains. And Libre is like a chain that is very focused on just bringing institutions into like on-chain. And so what that really looks like is obviously through tokenization of assets. I think like people like to just say RWAs because it sounds like a broader set of things that will be used in DeFi. And we could stick with RWAs. But ultimately, like their idea is like, hey, we've got a bunch of like wealth advisors out there and institutions. And eventually these institutions, like all the assets are going to be tokenized. And when all those assets are tokenized, well, we want them to be tokenized on Libre is how they're thinking about it. But then what you want is you actually want like activity on that chain that goes beyond just like tokenizing an asset. Like you actually want something, right? So you want like wealth advisors, for example, to be able to like create portfolios, rebalance portfolios, all of these things that like I don't think people envision how much like transactions it actually ends up driving. And eventually what you see is that you will see institutions that are going to like open things up. So like Libre, when it launches, like I would expect it to be completely closed, right? Like it'll be completely permissioned, and that's what it is. But the nice thing about something like Libre is that it doesn't need to stay that way. Eventually what they can do is plug into the aggregator layer, and now it allows for those assets to actually be used in other networks, such as in DeFi. And so I don't expect a chain like that to actually remain in that way. And we're actually seeing this, by the way. It's I don't know if you saw this today, but like Nike with .swoosh. So one of the fascinating things that we get all the time is, hey, you've got tons of enterprises. And what does that really do? Like they don't do anything. And I said, you're not really understanding like the bet on enterprises. It is not, I mean, some of them are pretty impressive, honestly, in what they do today. But the bet is what they're going to do in a few years, right? And Nike's like a great example with .swoosh. Like they just said, like it used to be a completely closed ecosystem. And now .swoosh NFTs are going to be allowed to be traded on like open marketplaces. And that's the kind of like evolution that I expect to see from like enterprises, like more and more as they get more comfortable. And what that means is like with time, more and more transaction being driven on chain instead of off chain. And suddenly when you've got a boatload of enterprises that are sitting on your chain who initially were doing a lot off chain and are starting to drive it more and more on chain, you get a kind of proliferation of actually on-chain transactions. And to me, this is the same for these, like something like Libre. You're going to see tokenization pick up. A lot of it, in my opinion, is probably going to happen on something like Libre. And then eventually that's going to get opened up. with getting more comfortable with regulations and things like that, you open it up and you start having those used in like a much broader set of ecosystems, including DeFi ecosystems, which is the core thing. Like if you can get traditional assets tokenized and used in DeFi, that is obviously a very positive thing, obviously risks associated with it, but like ultimately, that's how DeFi ends up growing in a very meaningful way.
Then there's, of course, Polygon's 3 different chains. Polygon's current POS chain is probably the one you most likely used if you've ever used Polygon. This chain is going to become a Validium chain at some point this year, from my understanding. If you don't know what a Validium chain is, it's just a layer 2 built on top of Ethereum, but it's not using Ethereum for DA. It's using something else for DA. And in this case, it's using Polygon's solution for DA versus Ethereum. And I guess the really important part to communicate with that just means that this chain is going to have super cheap fees. Then there's Polygon ZK EVM, meaning it's a full Ethereum rollup. It's built on top of Ethereum, and it uses Ethereum for DA, meaning the fees aren't maybe going to be as cheap, but the security assumptions are a lot higher. And when I say the fees aren't going to be as cheap, they're still going to probably be below like 5 cents. They're still going to be like relatively cheap versus something like Ethereum L1. They're just not going to be as cheap as Polygon's Validium chain. Then there's Polygon Maiden. Here's how Marc describes it.
I think the one thing that I touched on that we didn't really talk about in detail is like Polygon Maiden. And it's because it's like out there as this new thing. And I think the only plug I'll give over there, because it's really unique, is that like, first of all, Polygon Maiden is developed like completely in the open, like literally like all the chats, like everything is done on Discord that people can listen into. I think like the percentage of contributions from like external parties that are completely unrelated to us is like pretty like, I don't know, maybe 15 to 20% of like the contributions are just open source contributions. So like the involvement of the community in the development of Maiden is like super, super cool. But then the things that Maiden actually allows you to do based on being a completely different VM is like very unique. So first, like privacy is going to be like a built-in feature to Maiden. So it allows for privacy. Second is the way that transactions actually happen. So like, on like the EVM, you send an asset to somebody else and they get that asset. The way that it works on Maiden is more like, it's like very like asset based, is like you essentially post the kind of existence of this asset and somebody else can like essentially like, and we refer to it as like a note, and somebody can essentially come and like consume that note. The point being though, that when you like actually look at the architecture, there's certain applications that can be built that like you definitely could not build anywhere else. And one example of that is like an order book DEX that I was like referencing like previously. Because one of the core features of Maiden is what we refer to as like client side proving. So like usually you have like a prover that you're not running. On Maiden, you can like your phone can operate as a prover. And so you are proving your own transactions, which also means that you can like edit your own transactions. And if you think about this in like the order book context, you place a transaction, but cancel, you need to like change those orders all the time, especially if you're like a market maker, but like any like active trader falls in that category. You can't really do that on Ethereum, and you'd frankly even have trouble putting the entire thing on something like Polygon. And so you end up having like partially like on-chain, off-chain kind of order books. Maiden, because like you're literally placing orders on your own system, is something that you can like edit like on an ongoing basis. And so it allows for like a set of applications such as like a central limit order book to be built that is very unique and couldn't be used elsewhere. And then when you think of that and you layer on privacy, you're like, so you can actually have like a central limit order book where market makers don't actually have to have all their strategies exposed to the world, because they can actually keep those transactions private. And so I'm super excited about Maiden. It's something that like won't be on mainnet till like the end of this year. But that's like the one part of like the Polygon ecosystem that like doesn't get enough like attention because there's so much else going on. And so yeah, that's like an interesting tidbit for folks. Pay attention to Polygon Maiden.
So overall, when you take into account everything I've talked about in this video, you can see why I believe that Polygon is currently massively undervalued and should see some sort of massive price appreciation over 2024 or 2025. Okay, so on to price predictions, and remember, this is mostly just for fun. I can't actually predict the future. This is like my best educated guess on where I think price could land, knowing everything that I know. My base case for Polygon is a 10x from here. My bull case would be that Polygon really gains some decent attention and traction. As different chains start joining the ecosystem, it starts to build up some pretty decent network effects, and people are really loving this new seamless ability to move between chains. And because of all this, we see a lot of app developer and developer attention switch to Polygon, which Polygon already is the second largest developer ecosystem after Ethereum, but I see it even getting bigger with something like this and all these network effects. When you look at the ecosystem as a whole, you start seeing a lot more developer mindshare focusing on this Polygon ecosystem. In this scenario, I say it's possible we see Polygon 15x from here. BNB reached 105 billion market cap during last cycle, and it was a single, mostly centralized chain. If that's a reference point, then how much more valuable should something like Polygon be, given all the things that we've talked about? My ultra bullish case would be that not only do we see all these other things I've talked about, we see a lot of attention, a lot of developers come into the ecosystem, a lot of network effects, and users are loving it, but we also see a lot of really unique use cases and a lot of crypto's different UI, UX problems solved because of the ability to have these super specialized chains within this ecosystem. There's all these new app ideas and all these new concepts that you just literally can't build anywhere else because Polygon has this massive liquidity efficiency, but also this massive advantage given that you can move so seamlessly between these chains. This leads to an explosion of growth and hype and speculation as the market tries to figure out what something like this, an entire new concept, essentially crypto's version of the internet, would be worth. In this scenario, my ultra bullish Hail Mary scenario, I don't think it's that insane that we could see something like Polygon go as high as $500 billion in market cap. This is really similar to the all-time high of Ethereum during last cycle, which that might seem crazy. It might seem like I'm saying it's going to be as high as Ethereum. That's definitely not what I'm saying. The all-time high of Ethereum in 2017 was $130 billion. And like I said, BNB, an exchange token, 4 years later during the next cycle, almost matched Ethereum's 2017 all-time high. And I'm sure if I told somebody, that BNB would do that back in 2017, they would have said, that's crazy. It's not going to match the all-time high of Ethereum during this cycle. And obviously during the 2021 cycle, Ethereum went as high as 500 billion. So I expect during this next cycle, Ethereum's going to go a lot higher. It's going to go past that $500 billion market cap. So Polygon wouldn't be bigger than Ethereum. It would just match Ethereum's old all-time high. That's around a 70x from here. Also, again, to stress, this is my ultra bullish Hail Mary scenario. This is not my base case. This is not my bull case. This is my ultra bullish scenario. Now, my bear case for something like MATIC would be a couple different things. First off, if interoperability were solved a different way, like we already figured out interoperability before Polygon launches this ecosystem, that would of course be bearish for this concept, or at least much less bullish. Secondly, obviously, if the tech doesn't live up to the hype, like they could be talking this big game, and then in reality, when it deploys, there's like some sort of like nuance or thing that like maybe they didn't fully disclose that makes it a lot less usable and exciting from a user standpoint. That would also be something that would be bearish. Those two things, in my opinion, would be the biggest risk factors. If you want to watch the full podcast conversation between me and Marc, check out my podcast Steady Lads. There's a link to Apple, Spotify, etc. in the description of this video. And again, if you want to be able to get into the Obsidian Council, next time I open it up, there is a link to the waitlist in the description of this video as well. Make sure you sign up for that. As always, none of this was investment advice. None of this is me telling you to go buy MATIC or Pol or anything like that. You should always do your own research. And if you don't do your own research and you're just blindly copying YouTubers, maybe sometimes you get lucky and you make a little bit of money, but in the long run, I promise you will lose more money than you make because you have to actually understand how to do these things on your own if you want to succeed. If this video was helpful, make sure to hit that like button. If there's anything I missed or if there's anything you want to add, let me know in the comments below. And if you want to see more videos like this, make sure to hit the subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.